down 38.7% in 2022. Is Alphabet stock a buy for 2023? I'm going to answer that question using several different metrics in this video, so stay tuned till the end. The first thing I'm going to look at is revenue growth quarterly going back all the way before 2014. And what you could see with Alphabet is very nice revenue growth all the way going back. Slight fluctuations since the pandemic. First, a big drop off as advertisers pulled back spending right at the onset. They were not sure how the pandemic was going to impact sales, so advertisers paused spending as much as they could. And then, of course, the explosive rebound as businesses realized, like, oh my God, consumers are buying everything that they can get their hands on. So let's go ahead and advertise our products and we can sell them at full price without giving any discounts. So we really want to get the word out that we have this thing or service for sale. And so ad revenue jumped more than 50% in one quarter for Alphabet. And that steadily reversed. That growth has steadily reversed 6% in its most recent quarter as those tailwinds have now turned into headwinds. The Russian invasion of Ukraine, inflation is pinching consumer budgets. Consumers are not spending money on things online as much anymore. They're going out and spending more money on away from home experiences like restaurants and theme parks and concerts and bars and things like that. And that tends to not favor Alphabet as much as e-commerce sales does, because advertisers can advertise something on the search engine and buyers can click and purchase, and Alphabet makes really good money off of those kinds of transactions. Alphabet has a harder time monetizing consumer spending going out to restaurants, and restaurants have a harder time attracting people to go to their restaurants with online advertising. It's not as connected and measurable as e-commerce sales is. And so these headwinds have persisted and can partly explain why Alphabet stock was down so much in 2022. The next thing I want to look at is operating profitability. Sure, the company was making really good revenue growth, but was it profiting off of that? And the answer is yes, very much yes. Look at the explosive operating profit growth from Alphabet, going from less than 6 billion all the way up to over 18 billion in a few quarters in 2022. That's coming down a bit recently as revenue growth has slowed, but still 17 billion in profit is really good. And then let's look at cash flow from operations for the trailing 12 months, and a similar story. Very good growth and very good overall figures. 92.8 billion in cash from operations in the trailing 12 months. That's a tremendous sum to think about. $93 billion this advertising giant made, mostly from selling, offering services to consumers that are free, right? Google search is free to use, YouTube is free to use, Gmail and those services, a lot of them are free to use. And so it's making tremendous amount of money just from offering consumers free things and then making ad revenue off of that. So it's incredible. It's a profit machine. Finally, let's look at its valuation. Alphabet trading at a forward PE ratio of 17.42, near the lowest it had, matching near the lowest it has been over the last year. And then looking at Alphabet's price to free cash flow of 19.56, that is arguably the lowest, well, close to the lowest it has been in the last 7-8 years or so. So if we combine the price to earnings ratio forward near the lowest and the price to free cash flow near the lowest, the stock is arguably cheaper than it's ever been. Of course, there's reason for that. All of the headwinds that I mentioned earlier have caused the price, the valuation to come down. So there's reason for it. But still, you're able to buy this long-term, excellent performing company at near the cheapest valuation it's been going back several years. And these headwinds are short-term in nature. Longer term, these headwinds should resolve themselves and the company could return to growth in generating excellent operating profits and solid revenue growth. So for that reason, yes, I will say that Alphabet is an excellent stock to buy for 2023. Alright, that's all I've got for this video. Thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.